Looking at the PMIs then, moving on to PMIs, which for me is a better indicator. So GDP is lagging, PMIs is a bit more sensitive, like leading indicator. And just going to and all these links are in this Boom Bust Invest /crash page, so you can check them out there, and I'll explain everything that I'm talking about here as well. But just on the PMI homepage, you get this ticker of PMIs for each country. Below 50 is contraction. So Czech Republic there, 41. Anything below 45 means that there's quite a severe contraction. The Eurozone itself is 42. It's very low for Europe. France, 45. Germany, 38. So Europe looks like it's heading into a quite a big contraction of demand. Global manufacturing, so on a global basis, 48. So globally, manufacturing is also the leading. Is manufacturing and services or composite PMIs. Manufacturing is a leading indicator, and so 48 globally is contraction. So Italy 44, very low. Japan just slightly into contraction. So yeah, I mean, just taking a quick look at this homepage for the PMI Purchase Managers Index report that S&P Global do, you can get a good idea. Again, you see Netherlands, Europe tends to be below 45 at the moment. So if that continues, that's another sort of cross for remaining invested in global funds. So the press releases page as well. This is quite good. If you want to sort of drill down in particular countries, but also you're looking for the global reports here. So, for example, if we look at the global sector report, and we can see here the story here is that the services. So this is very recent, a few days ago. The services side of things is actually expanding, but the manufacturing side of things, like your metals, household real estate, chemicals, construction, forestry and paper, is in decline. And the problem is that the manufacturing sectors going into decline tend to lead the services sector down, or historically they do. So if this continues, then going forward, you'd expect to see the services also starting to reduce and go into decline. And so if that happens, that would be a fairly decent indicator that global demand is slowing, and you would see declines in global stock markets. So again, what I'm doing in Boom Bust Invest is tracking this each month or every other month, putting the reports out there, and then you can decide what you want to do. Like, this is just what I'm doing. So the trading economics just show a PMI sort of over time. So this is the US services PMI, for example. So you can see it sort of in general from about a year and a half ago, heading down. If you look at the longer picture, so this is going back to about 1996, you can see it heading down. Yes, it is distorted by COVID, but you can see the general level here is actually still lower. So you can see 50 is the point at which we're heading. The index shows that we're heading into contraction and not expansion in the economy. So, and this is just for the US, but as I say, the US is important to track because it is the big component of global funds. We hit 50 here and here. The only times we've done that before are 2020 for COVID, the Great Financial Crisis, 2008, 2007, and then the dot-com crash, just after 2000. So once again, heading down slightly, but if we see this continue down and head below 50, then that's the kind of point at which I will be making a decision to deallocate from global equities. So the manufacturing PMI for the US will be a similar story. So if we look at the 25-year, again below 50. See, before COVID, we were sort of going down maybe to 52 at the lowest point, 51 maybe, but coming back up. But here we're below 50. We've come back up and hit 50 and come back down again. So if this continues to go up, then fine. We know that manufacturing going up and we're less likely to have a recession and decline in stock markets. But if we see this turn down and then go lower than these previous lows here, then again, it's another sign that we're heading into contraction. The composite PMI will just show the same thing. It's just a combination of services and manufacturing heading in the wrong direction. And in the US PMI, this is another measure. I won't go into differences, but it's another maybe sort of more sensitive measure here. And we can see like quite a steep decline here below 50. And again, so 45 really is just, that's COVID, that's the great financial crisis, and that's dot-com bust. So, you know, we're at those levels now. So we'll see if that continues or not. China is actually looking a little bit, some good news coming out of China. They and again, if your fund has emerging markets, then that would be a tick in the bullish camp to remain invested. Although emerging markets is usually not a huge component. If China grows, then the rest of the world grows. So that's kind of why it's important to look at China as well. And they are having, it says that the China's PMI unexpectedly rose. So we'll see if that continues, because their manufacturing is heading down. So once again, we'll see if the services continues to rise or fall. Euro area has the biggest contraction in private sector activity since November. Once again, manufacturing represented a considerable drag on the Eurozone's economic performance. So Eurozone is definitely heading in the wrong direction at the moment, as we can see there. And this is a composite, so this is manufacturing and services. Heading back down again, tried to come back up, heading back down below 50. So once again, we just need to see if that continues heading down or not.